Hello, everyone. Welcome back to the Virtual Bacon podcast. In today's episode, we are going to focus on questions and answers. Over the past week, I've collected our top questions from our community on Discord, TikTok, Instagram. I have 17 of them, the top ones, in front of me right now. And we're going to answer each of them going in depth one by one. Before we start, if you have a question you want to ask me, make sure to join our Discord or go on TikTok, Instagram, YouTube, and Twitter. Over the next week, I'll be dropping a Ask Me Anything type of post. Leave your comment and question there, and we will answer your questions in the next episode. Let's get right into it. First off, let's go over the questions on Discord. Hammer asks, any advice if we're doing a protocol, we're developing a protocol, how to go about doing a raise? I do have some experience in this regard because I am part of a VC firm that focuses entirely on crypto and Web3 investing. Depending on how big your vision is, you can always go pretty far without raising funds first. We call this bootstrapping. So first, try to develop a proof of concept, some sort of demo app, and also try to have someone or even yourself gather the community interest across Discord, Telegram, socials like Twitter, YouTube, etc. These two parts can be done without any funding by just bootstrapping. And if you can do these two things well, it'll help you a lot in your later fundraising. Once you have trouble scaling this process, this proof of concept, then you can try to do fundraise and hire additional help or developers. I do have a deck that could be interesting to you, Hammer. So once you are ready to start fundraising, like I said, to scale, this is a deck example of a pitch deck. This one is by Yuga Labs, the company behind Bored Ape Yacht Club. Usually what you need is to describe your vision, who you are, what the problem is you're trying to solve, then go into your team's experience. What have you built before, what each team member's roles are, and put in there also examples of previous successes that you have had. On top of that, make sure to include current tractions, such as this is where your POC comes in. Maybe show a link of what your demo is for other people to try, and show some of your community numbers, organically how many people are interested to participate in your protocol. Another part that is very key is the tokenomics. So how much do you want to raise and what is the utility of your token? This part usually is the most difficult because early on it's very hard to figure out. Eventually you want to aim to get to a point like something like this. This is the tokenomics for Stargate, where it has all the allocations, the lockups for all of the private sale and public sale, as well as your team and all the tokens you plan to give out. Are there any utilities for the token, for example, transaction fees, etc., and how you plan to launch the protocol? These can come at a later stage. So if you don't have these right away, don't worry about it. But make sure you have some sort of a POC and some sort of a community traction before you go about doing a fundraise. So if you have more questions, feel free to DM me and send me a deck if you already have it. I'll be glad to check it out. Okay, moving on to the next question. Disco from Discord asks, have you got any strategies on real yield, for example, GMX or GNS or any others? So I have a different opinion on this real yield. I don't like the real yield narrative. I think it's very misleading. Uniswap has always had real yield way before this was a thing. Let me show you. Here on DeFi Llama, you can track all of the top yield across all of DeFi. And if you just filter by Uniswap and rank by top TVL, you see that for Bitcoin, ETH, and USDC pools, pure transaction fee based yield can get up to 28%, 61%, 57% APY. This is right in line with what you expect on GMX for the GLP pools, which also has these three assets mainly in it. The only thing that real yield projects do differently is that they also distribute some of their yield to their governance token holders. For example, on GMX, you have 18% to GMX holders or stakers, 33% to GLP holder stakers. Problem is, this distribution is not an innovation. It's common practice in traditional companies. Something called dividends you might have heard of. The problem in crypto is that once you start distributing dividends, it's very clear that your token becomes a security. The SEC will not like it. Here's a very simple example. Just look up security tokens, what their definitions are. A security token could represent various kinds of securities, including stocks, bonds, dividend-paying assets, or investment contracts with security-like purposes. Regular payments of dividends, revenue sharing, profit sharing, etc. It's extremely clear that once you start giving dividends to your governance token, it becomes a security. It's a huge risk. Just because your project is reckless, or you can call it innovative somewhat, to distribute dividends doesn't make it a good investment. What really matters is the core product. If you have a bad product and no users, there wouldn't be any yield to distribute. So back to GMX, the exchange itself is cool. The product works really well. The liquidity is very deep. You can long short all kinds of assets on it, very smooth. This is a good product. GMX is not good because simply they distribute real yield. The product comes first. So back to your question, I'm not interested in particularly any product that just so happens to distribute real yield. If there were no regulations, all of the existing DeFi projects, just like Uniswap, who already have revenue, would just distribute real yield anyways. So this narrative itself does not make any specific project worth investing in. Next up, Crypto Omega asks, how does it look your portfolio right now? I always have majority in Bitcoin and Ethereum. I've expressed this many times. And because I'm super bullish on Ethereum post-merge, I think the next 3 to 12 months are going to be super bullish for Ethereum based on its economics. I converted all my Bitcoin to Ethereum. It's currently my biggest holding. I have around 50% in Ethereum. I'm also holding some altcoins that have major catalysts coming up. Cardano, Atom, ApeCoin, Bone for Shibarium, Reserve Rights, RSR, EOS. These make up about 20% of my portfolio. The last 30% is in USDC. I do plan to sell all of these altcoin positions relatively soon and only hold Bitcoin and Ethereum, because my bear market strategy has always been to hold Bitcoin and Ethereum only for the long term and really focus on what the new narratives are. Try to hunt for new projects, new ICOs, because these had the biggest gains in the last bear market. Okay, moving on to TikTok questions. First off, NFT seller and comfortably numb both ask, is ETHPOW worth buying? Does it have any future? They are referring to Ethereum proof of work, which is the fork that came out after the ETH merge, which still continue to support mining. This, unfortunately, is a scam, or maybe not a scam, but it will die. It will go to zero. There are many fork cash grabs just like this. Example, during the 2017 Bitcoin hard fork, we've had a lot of other Bitcoins come up. There's still Bitcoin Cash, Bitcoin SV you probably heard of, but there were another 100 of them. There were Bitcoin Diamond, Super Bitcoin, Bitcoin Private, Bitcoin Gold, Bitcoin XT, etc. All of them died. This time around on Ethereum, it's even more pronounced because Ethereum is all about the developers and the dApp ecosystem. None of them support Ethereum POW. None of the DeFi apps migrated over to Ethereum POW. It's pure speculation. That's why I encourage people to not touch it. And if you got any free coins from the fork, just sell it. Next up, what do I do with my BETH? Macaroni asks. I don't know what to do. I withdrew it to my MetaMask. Now that the merge is over, I don't know what to do. BETH on Binance is just a wrapped version of staked Ethereum on Binance, issued by Binance. So each BETH is still backed by one staked ETH plus interest. That's why the price is always going to be backed by one ETH. It's going to be very similar. And even if you can't trade it on Binance for whatever reason, you can still find it on CoinGecko. It's tracked just like any other ERC20. And under the exchange list or markets list, you can find other exchanges that trade it. Very simply, you can find any of these exchanges, send it over, deposit, and sell it for anything else, or do whatever you want. John Frankie Mercado asks, what are your criteria for judging a crypto project from legit to scam or sketchy? Let me give you guys an example. This is just a random coin I pulled up, but it is a project that hasn't launched yet. First, for a project that hasn't launched yet, I will look at their team, product, investors, and partners specifically. The team needs to be real people, not anonymous. Anonymous is a huge red flag. And they should have built successful businesses before. So look at what previously companies they've held that they've built, if they had exits, and especially if they built Web3 companies, it's even better. And then I look at the product. The product can be really simple. Here they're doing synthetic assets platform, etc. Pretty easy to understand. But ideally, it should be an original idea that they came up with, they invented, so that they're passionate about it. So they need a reason to be building this. Otherwise, if they're just in it to raise some money and sell some tokens, they're very likely to give up. Next up, I will look at investors and partners. Investors and partners usually speak a lot as well, because by working with them, they're putting their existing reputation on the line. And that's for projects that haven't launched. If a project is already trading, let me use 1inch as an example, I will look at a few things. Is there a lot of trading volume, first off? 45 million is pretty good. And then look at the exchanges. Okay, are the trading volume real? Are they legit exchanges? Yes, it is in this case. It's pretty distributed. There's a lot going on Binance. Most of the major exchanges list them. Really good sign. Do they have deep liquidity on decentralized exchanges? So for example, on Uniswap, you can see they have $8 million in liquidity here. Pretty good. So that's also a good sign. Even if the centralized exchanges go down, I can still sell it just on Uniswap. And then I would try to find their investors' prices. So at what valuation did the private investors get in at? Is the current valuation much higher than the private investors' entry? This will determine, am I getting a good deal or not, or will I get dumped on? And lastly, are there any similar projects and what's their valuation? For example, similar projects to 1inch are Uniswap, PancakeSwap, Curve, Sushi, Balancer, etc. Does this project have much higher or lower valuation than the market leaders? In this case, you can see it's relatively cheap compared to the market leader like Uniswap. So that's pretty good. Next question. Tim asks, what is the best APY, safe storage, location online? The only DeFi APY, in my opinion, that is worth doing is with stablecoins, Bitcoin, or Ethereum. Other altcoins just fluctuate too much for the rewards to be worth it. The best APY on these three right now is probably Uniswap v3 liquidity pools. Good tracker, again, is DeFi Llama. Go to the Yields tab. Here you can filter by the coins you want, Bitcoin, Ethereum, etc. But I will just go ahead and filter by Uniswap project only because I know that's the best yield. Sort by the highest TVL and you see BTC, ETH, USDC pools have really high APY. So this one is BTC to ETH at 28% APY, USDC to ETH at 61%, USDC to ETH again at 58%, and I think there's also a USDC, actually this one ETH to USDT also 46%. So BTC to USDC 35%. These are around the highest yield you can get. Again, for the word, these are all real yield. They come from trading fees from Uniswap. There is no other token that you are farming here. It's pure revenue that comes from Uniswap. However, the downside is this is Uniswap v3. It's slightly more complicated than v2. You need to monitor the pools every few days to make sure your LP is still within range of the current price. If for some reason the price fluctuates a lot, you might stop earning rewards. If you want to learn more about this, look up Uniswap v3 on YouTube to learn more. Next up, Mr. Fern asks, are NFTs an intellectual property? This really depends if the project has specific license agreements. For example, here, Bored Ape Yacht Club have a very clear ownership agreement that tells you what you can and cannot do with your Bored Ape. Obviously, anyone can just screenshot and share your NFTs, but when it comes to using it for commercial purposes, it's treated the same way as any digital artwork. If you sell a t-shirt with someone's Bored Ape on it and you make a lot of money, they can go after you since they own the digital rights to that picture. This only applies to the top collections though. 99% of other NFTs don't have the manpower, the money, or even the point of doing this because it's not worth that much. So many of them actually opt for something called CC0 license, no rights reserved. This allows anyone to create derivative work of the art and sell it. And this is much more open, in my opinion, much more Web3 native. Next up, let's move to Instagram. First question from Steven Ellis. What are your thoughts on Polkadot? Stay in or get out? So Polkadot is very unique. It has its own ways of doing interoperability with its parachains and relay chain model, but it's somewhat of a closed ecosystem in comparing with other projects. But also for how big the market caps are of the parachains and all of the so-called infrastructure projects within Polkadot, their actual user base are very small. So that's the main criticism for it. I think Dotcoin itself will continue to survive because there's such a big fan base. It's listed everywhere. The trading volume is extremely high. There's so much money in it. So it will continue to survive. But they need to get more users and developers if they want to be a much more productive ecosystem like Ethereum or even Solana. Maybe start with revamping the Polkadot.js wallet and the way you interact with parachains, because all of this is extremely confusing in comparison to MetaMask. Everybody that have used this, parachain and Polkadot.js wallet, have said it's extremely hard to use compared to everything else. Next question from Real Nick Godric. What do you think of exchange coins as long-term holds, CRO, BNB, KuCoin shares, etc.? Exchange coins will always have their share of the market, but not all exchange coins are made the same. You want to target exchange coins that are closely integrated with the parent exchange. Let's look at all of the popular exchange coins. If I just go to BNB here and look up exchange-based tokens, there's a whole category of them. BNB and CRO are good examples. They give you benefits on the exchange, there are buybacks, and they have their own blockchain ecosystems. So BNB have been doing buyback and burns with their revenue for the past 3 or 4 years already. And CRO also did a huge burn. And both of these also have blockchain ecosystems, layer ones, right? The BNB chain and Chronos chain that are based on the BNB and CRO tokens. On top of that, Binance and CZ also relentlessly support and talk about BNB. CZ even got a tattoo of the BNB logo on his arm. It's not just a joke. On the other hand, FTT is a bad example. FTT is the exchange token of FTX. Even though it shares the same name, it only has some fee benefits on the exchange when you stake it. And the leadership from FTX don't really promote FTT ever. They are more focused on the trading volume of FTX and getting more users to FTX, but none of the revenue goes to FTT. Adding salt to it, Sam, the CEO of FTX, doesn't really talk about FTT at all as a blockchain ecosystem. They like things like Solana and Aptos and Sui. They talk about these other blockchain ecosystems as being good. So FTT is not integrated in it at all. That's why when you compare stuff like FTT versus BNB are much better buys if you're betting on exchange coins. All other exchange coins that I've seen are very similar to FTT's model. The only two that are really standing out are BNB and CRO. Next question, Robin asks, are you going to let us know when you buy altcoins? Unfortunately, no. This isn't a trading signals channel. Even if I did, I wouldn't be able to make a new video every time I buy or sell any coin. First off, the videos might have delay, so you won't get the same entry as me. If you see it on TikTok, it might be a week late already. Secondly, the small cap coins could fluctuate a lot, so even from just me making a video, you might be buying the top already. It might have already pumped. And lastly, even if you follow my signal right on the dot, you won't be able to perfectly copy what I do. Why? Because every trade has a reason. There's a setup. It may be potential news or some other analysis. So if you only follow what to buy or sell without understanding the analysis and the reason behind it, you will panic when the trade doesn't go well. If price just goes down a bit, but the analysis still holds true, you're going to panic because you don't have your own judgment of what to do. When is this analysis right? And in what case is it wrong? And I have to exit. So no, I won't give pure buy or sell signals, but I will try to share my analysis process and reasons behind trading. Next question, Omar asks, is 2024 the next bull run? Nobody really knows when the next bull run will be. 2 years is a long time in crypto. However, the only indicator that has worked before is the Bitcoin halving. Usually the year after the Bitcoin halving can be very bullish. We had the 2014, 2015, then 2017, 2018, then 2020, 2021. So my best guess is 2024 will be quite bullish. There is also a dark horse event that is the Ethereum merge that just went down, which introduced technically a triple halving. The name came from the supply cut being 3 times as strong as a typical Bitcoin halving. So I hope the next year can be a new bull run, but we'll have to see. I am optimistic for ETH to at least have a good year starting from now. Next up, there are a bunch of questions about Shibarium and Bone and Shiba Inu. The main alpha here for Shiba Inu is the Shibarium Layer 2 launch. Unfortunately, I'm just as in the dark as you guys. There has been some rumors. One of the mods for XFund, who are the developers of the Shibarium Layer 2, tweeted September 30th, but the official team said no, this is complete rumor. So I'm still waiting as well. Once any dates are announced, I will let you guys know. Phil asks, are you seeing AVAX and Joe survive the bear market despite the law firm drama? AVAX will survive the bear market, no doubt. They have a ton of money behind them. They're a huge ecosystem. And whether the drama was true or not, they have dealt with it already. Trader Joe, however, is really hard to say. Decentralized exchange projects just don't have that much money in their treasury to survive a long bear market. Especially for Trader Joe, they heavily rely on a single blockchain ecosystem success, which is Avalanche. They still haven't pivoted. That is a big red flag. There were so many exchanges that are based on a single ecosystem's success. And once the whole rotation narrative went down, all of these projects, all of these DEXs need to reinvent their vision, think bigger, and pivot to something else. Or else, I think they will all die. Next question. Jake C asks, blind hold for 10 years, BTC or Ethereum? I would still pick Bitcoin as a blind hold because it still has better chance to survive for 10 years than Ethereum. If I can only hold one coin for 10 years, it has to be Bitcoin. I can't risk losing all my money. But why not just hold both? Next one, Jov.dev asks, how do you stay up to date and do your research on crypto? I follow all the news sources through a RSS feed. This standard of RSS can be used for all types of news sources. I can track news sites, YouTube channels, Telegram, Twitter accounts, Medium blogs, even some announcement channels of specific projects. Here is kind of my workflow every day. I go on here, just look at it by timeline. Here are all the channels I'm tracking, as well as single projects, blog announcements I'm tracking. On top of that, I'm totally addicted to Twitter. So if anything breaking comes up, I do see it. I just get that by casually scrolling on Twitter all day. Unfortunately, I really need to fix this. Ahmed asks, if we see a recession, will crypto enter a deep bear market or likely level off for some time? There are two parts to this answer. Let me bring up the charts to show you what I mean. First off, the question is crypto and stock market correlated? Right now, yes. Crypto is currently highly correlated to other speculative assets like the stock market. Here we have the total crypto market cap in the colored candles, and overlaid on top of it, I have the white line. This is the S&P 500. As you can see, the two are closely correlated. Every time there's a pump, both dump together, pump and dump together. So whatever impact a recession has on the overall market, as indicated by the S&P 500, it will have the same effect on crypto. Therefore, the question really becomes, if we see a recession, what happens to the stock market and speculative assets in general? I don't have the answers for this. The intuition is bad economy leads to bear market. But look at the bull market we had at the start of the pandemic. Zooming out to March of 2020, we had a huge bull run for a year and a half. The real deciding factor, as indicated here, is the government, the central banks, and their policies. And I don't have any insights on this. I don't think it's even that productive to speculate on this. Everyone and their mother is talking about macroeconomics now. Nowadays, I really treat these news in the macro environment as entertainment and pure speculation. Unless you are specifically a researcher and you can come up with your own analysis and numbers on where the economy is going, what the inflation numbers will be, you might have an edge there. But if you're just consuming the news of are we in a recession or not, what's the CPI numbers, what's the inflation numbers, you don't have an edge there. There's no actionable signal there. Lastly, there were a bunch more questions about individual coins, etc. But if you want to ask a question, please don't just give me a name and ask me what I think. I've heard of all these coins like VeChain, Flux, VXV, Deso, Chilids, but all I know is that they are legit. They are big projects. I don't even know exactly everything they do. If you think a coin has potential to stand out against the rest, tell me more about it. Tell me what the analysis is, what the reason is. Is there some specific news that's coming up, or is it undervalued because other people haven't heard of this new feature? What's the analysis there? Why is this standing out against the other 300 to 500 really legit coins? Give me some direction so I can dig deeper on it in terms of the events and tell you what I think. Otherwise, there are way too many legit coins nowadays. Even if a coin is super good, it won't stand out unless there's some short-term alpha, short-term catalyst. So I appreciate all your questions, but please don't just tell me, what do you think about this coin? Tell me more about the coin. And if you give me some direction, I will for sure do the research. Okay, that's it for this week's episode of Ask Me Anything on the Virtual Bacon Show. If you like this content, please consider subscribing to my YouTube channel, following on all of our social media. If you want to ask questions as well, make sure to join our Discord, discord.gg/bacon, or follow me on all my socials, link in the description and show notes below. Early next week, I will be putting out a new post on all my socials on Twitter, TikTok, Instagram, YouTube, etc., asking you guys for a new batch of questions. Stay tuned for that, and I will see you guys in the next episode. Cheers. Bye for now.